Look around you. What do you see? Really look. You see people walking down the street, staring at their phones, buying the same overpriced coffee, wearing the same branded clothes, driving cars they can't afford to go to jobs they hate, just to come home and watch shows about people living the lives they wish they had. They repeat this loop every single day until they die. In the gaming world, we call these non-playable characters, NPCs. They are background decoration. They are programmed to follow a script. And if you are watching this, there is a terrifyingly high statistical probability that you are one of them. You might get offended. You might say, I am unique, I have dreams, I have a degree. But let's look at the data. The average person follows a financial algorithm written by society, banks, and marketing departments. The code is simple. Go to school. Get into debt for a piece of paper. Get a job to pay off the debt. Buy a house you can't afford to impress neighbors you don't like. Fill that house with plastic junk that loses value the second you buy it. Max out your credit cards. Retire at 65 if you're lucky and spend your remaining years trying to survive on a pension that inflation has already eaten alive. That is the NPC script. And the system loves it when you run this script. The banks love you because you pay interest. The corporations love you because you are a loyal consumer. The government loves you because you are a dependent taxpayer. You are the perfect battery powering the matrix of consumerism. But here is the brutal truth that Warren Buffett realized decades ago. You cannot get rich if you are running the same operating system as everyone else. You cannot outperform the market if you are the market. Wealth is not a function of intelligence. Plenty of smart people die broke. Wealth is a function of behavior. And the behavior of the wealthy is almost diametrically opposed to the behavior of the NPC. While you are programmed to consume, they are programmed to own. While you are programmed to seek social validation, they are programmed to seek value. Let's talk about the most dangerous glitch in your programming. It's called the outer scorecard. This is a concept Buffett uses to explain why most people fail in life and money. The NPC lives by the outer scorecard. This means your self-worth comes from how the world perceives you. You buy the luxury car not because you love engineering, but because you want the guy at the stoplight to think you made it. You buy the designer watch not to tell time, your phone does that, but to signal status. You are spending real money, money you traded your life hours for, to buy fake respect. Buffett, on the other hand, lives by the inner scorecard. He is worth over $100 billion, yet he has lived in the same house in Omaha since 1958. He bought it for $31,000. He drives a regular car. He eats McDonald's for breakfast. Not the expensive combo, but the cheap sandwich. When he drives to the office, if the market is down, he buys the cheaper sandwich to save a few cents. An NPC looks at that and laughs. They say, look at that cheap old man. He doesn't know how to enjoy his money. But Buffett isn't suffering. He just doesn't care what you think. He doesn't need a yacht to know he's successful. His validation comes from his internal logic, from his decisions, from his patience. He has unplugged from the matrix of validation. This is why you are poor. You are bleeding capital to feed an ego that isn't even yours. It's an ego constructed by advertising agencies. Every time you upgrade your iPhone when the old one works fine, you are paying a stupid tax. Every time you finance a car at 7% interest, you are volunteering to be a slave to the lender. You think you are buying freedom, but you are buying chains. The chains of habit are too light to be felt until they are too heavy to be broken. That is a Buffett quote, by the way, and right now those chains are wrapping around your neck. The problem is that the NPC script is comfortable. It feels safe to do what everyone else is doing. If your friends are broke and your family is broke and you are broke, it feels normal. It feels inevitable. You validate each other's bad decisions. You sit around complaining about the economy, about the politicians, about the rich getting richer. You bond over your victimhood. But nobody is coming to save you. The government isn't coming. A lottery ticket isn't a retirement plan. The only way to rewrite the code is to stop acting like a victim and start acting like an allocator of capital. But before you can allocate capital, you have to stop setting it on fire. You have to understand the difference between an asset and a liability. And no, your house is not an asset. Not in the way you think it is. An asset puts money in your pocket. A liability takes money out of your pocket. When you buy a big house, you are signing up for taxes, insurance, maintenance, interest. It is a cash flow negative machine. The NPC thinks, but it goes up in value. Maybe. Sometimes. But inflation is usually rising right alongside it. While you are bragging about your home equity, Buffett is buying businesses that send him checks every single quarter. He is buying productive cash flow. You are buying a place to sleep that drains your wallet. This distinction is critical because the NPC works for money. The investor makes money work for them. It sounds like a cliché, but it is the mathematical reality of the universe. When you are an NPC, you are selling your time. You are trading 5 days of freedom for 2 days of weekend. And because you hate your job, you spend the weekend spending money to numb the pain of the work week. It is a self-perpetuating cycle of misery. You spend to feel better, which keeps you broke, which forces you to keep working, which makes you miserable, so you spend to feel better. Breaking this cycle requires a level of discipline that most people find repulsive. It requires you to look weird. It requires you to say no when everyone else says yes. It requires you to drive the Honda when you could lease the BMW. It requires you to stay home and read annual reports or learn a skill while your friends are out drinking away their potential. Buffett spent his early years reading thousands of pages a day. He was obsessed. He wasn't trying to look rich. He was trying to understand how the machine works. He understood that money is just a claim on future resources. And if you waste your claims today on nonsense, you have zero claims on the future. You are eating your own seed corn. The transition from NPC to main character starts the moment you decide that your future freedom is more important than your current appearance. It starts when you realize that looking rich is the fastest way to stay poor. Real wealth is invisible. It's the money you didn't spend. It's the option to quit your job. It's the ability to wake up in the morning and say, I can do whatever I want today. That is the definition of success for Buffett. Not the private jet, but the autonomy. The NPC has zero autonomy. The NPC has a schedule set by a boss, a lifestyle set by the bank, and a mindset set by the television. If you want to escape, you have to understand the enemy. The enemy is not the billionaire class. The enemy is your own impulse control. The enemy is your inability to sit in a room alone and not spend money. Pascal said that all of humanity's problems stem from man's inability to sit quietly in a room alone. Buffett proved that all of humanity's wealth comes from the ability to do exactly that. To sit. To wait. To watch the NPCs run around in a panic while you hold your position. You think you understand compound interest. You don't. If you truly understood it, you wouldn't be buying coffee at a markup of 3,000%. You wouldn't be ignoring your credit card balance. The human brain is chemically incapable of grasping exponential growth naturally. We are evolved to think linearly. If you take 30 linear steps, you cross the street. If you take 30 exponential steps, you circle the earth 26 times. The NPC mind is linear. It expects results to match effort in a straight line. You work for an hour, you get paid for an hour. That is linear. That is the trap. Wealth creation is exponential, but here is the catch that filters out 99% of the population. The curve is flat for a very, very long time before it goes vertical. This is where the boredom kills you. You look at Warren Buffett's net worth graph. It is practically a flat line until he is 50 years old. 50 years. Most of you can't stick to a diet for 50 days. You can't hold a stock for 50 minutes without checking the price. Buffett calls this the snowball effect. When you start rolling a snowball, it is small, it is wet, it is cold. You are pushing it up a hill and it feels like nothing is happening. The surface area is tiny, so it only picks up a few flakes of snow with every revolution. The NPC looks at your tiny snowball and mocks you. They say, look at that idiot saving 10% of his paycheck, he will never be rich. Meanwhile, the NPC is trying to build a snowman out of mud because they want it right now. But you keep pushing, and eventually the physics take over. The surface area grows. Suddenly, one revolution picks up more snow than the first 10 years of pushing combined. This is the magic that you are too impatient to witness. Buffett didn't become a billionaire because he is a genius stock picker, although he is smart. He became a billionaire because he started when he was 11, and he didn't stop. He has been compounding for 3/4 of a century. If Buffett had started investing at 30 and retired at 60, you would have never heard his name. He would be just another wealthy retiree playing golf in Florida. His secret weapon was time, and time is the one asset you are wasting every single day on TikTok. You treat time as if it is infinite. You say, I'll start investing when I make more money. I'll start when the market crashes. I'll start next year. You are burning the fuel that powers the compounding machine. Every day you wait is not just a lost day, it is the destruction of the exponential tail end of your wealth curve. The dollars you waste in your 20s are not just dollars. They are the millions you won't have in your 60s. But the NPC cannot see this. The NPC only sees the sticker price today. They lack the vision to see the forest contained in a single acorn. And this brings us to the stock market, the greatest mechanism ever invented for transferring money from the impatient to the patient. That is a direct quote from the man himself, and yet you treat the market like a casino. You treat it like a slot machine. You look for the flashing lights. You look for the hype. You get your financial advice from Reddit threads and YouTube thumbnails with shocked faces. You are feeding the beast. The market is designed to exploit your psychology. It is designed to make you buy when you should sell and sell when you should buy. Buffett gave us the perfect metaphor for this, Mr. Market. Imagine you are in business with a partner named Mr. Market. Every day he comes to your office and offers to buy your share of the business or sell you his. But Mr. Market is a manic depressive. He is bipolar. Some days he is euphoric, seeing only rainbows and unicorns, and he names a ridiculously high price for the business. Other days he is depressed, suicidal, seeing only doom and gloom, and he offers to sell you his share for pennies on the dollar. The NPC looks at Mr. Market's mood swings and thinks they are reality. When Mr. Market is screaming that the world is ending, the NPC sells everything in a panic. When Mr. Market is partying, the NPC buys at the top because of FOMO. The intelligent investor looks at Mr. Market as a tool, not a guide. You are supposed to exploit his insanity, not participate in it. But you have an emotional tether to the ticker symbol. You feel physical pain when you see red numbers. That is a biological defect. You need to surgically remove that emotion if you want to survive. If you own a farm and the price of corn drops, you don't sell the farm. You just wait for the next harvest. But because stock prices are flashed on your screen every second, you think liquidity is a command to act. It is not. Inactivity is a superpower. Lethargy bordering on sloth is the investment style of the cornerstone of wealth. You need to understand the difference between price and value. This is the holy grail. Price is what you pay. Value is what you get. They are rarely the same thing. The NPC buys things because the price is going up. That is the definition of a bubble. You are buying momentum, hoping a greater fool will come along and pay you more. Buffett buys things because the price is lower than the value. He buys dollar bills for 50 cents. It sounds simple, right? It is simple, but it is not easy. Because when a dollar bill is selling for 50 cents, usually the world looks like it is falling apart. The news is terrible. Everyone is screaming recession. Your friends are telling you cash is king. To buy when there is blood in the streets requires an arrogance and a conviction that the NPC simply does not possess. You are terrified of being wrong in the short term. You would rather fail conventionally than succeed unconventionally. You crave the safety of the herd. If everyone loses money in a crash, you feel okay because, hey, the economy is bad. But if you lose money alone, you feel like a fool. Buffett is willing to look like a fool. He was mocked during the dot-com bubble. People called him a dinosaur. They said he didn't understand the new economy. He sat on his hands. He bought nothing. Then the bubble burst, the cool kids lost everything, and the dinosaur was still standing, checkbook in hand, ready to buy the wreckage. The market is a voting machine in the short run, but a weighing machine in the long run. The NPC is voting. They are voting on popularity, on trends, on narratives. The investor is weighing. They are looking at cash flow, assets, moats. You don't even know what a moat is. You invest in companies that have no protection against competition just because they have a cool logo. A moat is a castle wall. It protects the profit margin. If you buy a castle with no walls, the barbarians are coming. And in capitalism, the barbarians are always coming. You have to stop viewing stocks as pieces of paper that wiggle around on a chart. They are ownership stakes in real businesses. If you wouldn't buy the whole pizza shop down the street because the owner is an idiot and the pizza tastes like cardboard, why would you buy a stock just because it's trending on Twitter? You need to think like a business owner, but you have an employee mindset. You want the paycheck without the risk. You want the reward without the diligence. You treat your life savings with less scrutiny than you treat the purchase of a used television. You spend hours researching which TV has the best pixels, but you throw $10,000 into a crypto coin named after a dog because a stranger on the internet said it was going to the moon. This is why you remain the background character in someone else's movie. You are funding their exit liquidity. This brings us to the single greatest cause of financial suicide: stepping outside your circle of competence. You have an ego problem. You think because you are smart in one area of your life, you are smart in all areas. You think because you are a good dentist or a good coder, you are automatically a good stock picker. You are not. The market does not care about your IQ score. It does not care about your degree. Buffett calls this the circle of competence. Inside the circle are things you actually understand. Outside the circle is everything else. The size of the circle doesn't matter. Knowing the boundaries of the circle is everything. Buffett stays in his circle. He doesn't invest in tech. He doesn't understand. He doesn't chase trends. He has a box on his desk labeled "too hard," and he puts 99% of opportunities in that box. You, however, have no too hard box. You have a FOMO box. You invest in biotech companies when you haven't opened a biology textbook since the 10th grade. You invest in decentralized finance protocols when you can't even balance your own checkbook. You are wandering into a minefield blindfolded because you saw someone else run across it and survive. That is not investing. That is survivorship bias. You are playing a game where the rules are written by people smarter than you, faster than you, and richer than you. And you are sitting at the poker table wondering who the sucker is. If you don't know who the sucker is within the first 10 minutes, it's you. The result of this arrogance is that you violate the most sacred laws of wealth preservation. Buffett has 2 rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1. You interpret this as a cute aphorism. You think it means try to make money. No. It is a mathematical warning about the asymmetry of loss. If you have $100 and you lose 50%, you have $50. To get back to 100, you don't need a 50% gain. You need a 100% gain. You have dug a hole so deep that you have to work twice as hard just to get back to 0. This is why volatility kills the NPC. You take big risks to get rich quick, you lose 50%, and then you spend the next decade trying to recover. Meanwhile, the boring investor who compounded at a steady 8 or 10% is miles ahead of you. You are running on a treadmill. They are riding an escalator. Avoiding stupidity is easier than seeking brilliance. Charlie Munger, Buffett's right-hand man, said it best. It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid, instead of trying to be very intelligent. You are trying to be very intelligent. You are trying to time the top, short the bottom, use leverage, trade options. You are doing financial gymnastics and breaking your neck. Stop trying to be a hero. The graveyard of Wall Street is filled with people who tried to be heroes. So, what is the solution? How do you break the NPC script? You have to surrender. You have to admit that you are not the main character of the global economy. You are a small fish, and the best way for a small fish to survive is to swim with the current, not against it. This means acknowledging that you probably cannot beat the market. Buffett famously bet $1 million that a simple S&P 500 index fund would outperform a basket of high-fee hedge funds over 10 years. The hedge funds were run by the smartest guys in the room. They had algorithms, inside info, leverage, and Buffett crushed them. He crushed them by doing absolutely nothing. He bought the entire American economy and went to sleep. That is your roadmap. It is painfully boring. It is unsexy. You won't be able to brag about it at parties. When people ask what you are investing in and you say low-cost index funds, their eyes will glaze over. They will turn away to talk to the guy who says he's making $10,000 a month day trading Forex. Let them talk. In 20 years, that guy will be broke or in jail, and you will be free. You need to embrace the boredom. You need to fall in love with the process of accumulation. You need to get your dopamine from seeing your net worth go up by boring, predictable increments, not from the adrenaline rush of a gamble. The choice is yours. You can keep acting like an NPC. You can keep seeking the outer scorecard, buying things you don't need, impressing people who don't care, and hoping the government saves you when you are old. You can keep waiting for the perfect time to start. You can keep complaining that the game is rigged. And you would be right, the game is rigged. It is rigged against the ignorant, the impatient, and the emotional. But it is rigged in favor of the disciplined. The red pill is simply this: consume less than you produce. Invest the difference in productive assets. Wait for a long time. Don't interrupt the process. It is not rocket science. It is barely fourth-grade math. But it requires a PhD in emotional control. The doors to the prison cell are open. They have always been open. You're sitting inside because you are afraid to walk out into the cold reality of responsibility. Warren Buffett showed you the way out decades ago. The map is right there. Stop looking at the stick figure drawings and laughing. Look in the mirror. Are you going to be the stick figure that gets erased, or the one that draws his own future? Class dismissed. Now go do the work.